money miners. Gee, bit of a bloodbath on the market today, boys. Matches your friggin' hoodie.
Red.
Just red across the screen. And a couple that aren't. One, Spartan's one of them. That's up. We're going to go into why today. Mate, Macmahon and Decmil. Macmahon expanding its civil capabilities.
Speaking of red, mate, the market doesn't like this deal. Macmahon's down. So JD's going to unpack it all for us.
More.
Yeah, gonna get into it.
Yeah, a bit more of nothing on Gold Road. Not too much.
More red.
More
The
red,
stock's
but
down as well.
nothing too much. But and a couple of quarterly previews. Pantoro surprised the market with an early quarterly.
Yep, and still red.
Still red. Still red.
Going to chat about Hawsons as well.
Hats off to you. What do you got? Horses?
Yeah. Hawsons is a iron ore company / project that I learnt about today for the first time, so we're going to touch on them.
Yep.
Trav,
You
you're going
don't
to speak
strike
about...
me as a horse TAB account owner, JD, so that makes
Nah,
sense.
what gave that away, mate?
Yeah, that's right.
And I'm going to have a yarn about what I'm looking forward to in the quarterly season from the majors, Matty.
Oh, very good. I might contribute.
I'm looking
Come
forward
up
to
with
that.
Yeah,
something.
I've got a few thoughts for that one too.
Oh,
You know, we'll
beauty.
chip in.
Jonas Benedict Dorling, the standing man today, mate. Blood on the streets. What is going on in the ASX 200?
I actually wrote this bit, Matty.
Oh, Jesus Christ.
This one's Travis.
I surprised you with a little bit of
No offence.
minor macro commentary, but I just thought it'd be worth mentioning. So apparently it's the worst day in a year with the ASX 200 index down 2% in a single day.
Bloody hell.
The iron ore majors, obviously, because they account for so much of the index, they kind of lead the way, even though it's a relatively lower percentage move for them. But look, Rio dropped 3.4%, BHP down 2.4%. Iron ore actually fell around that much itself, like the commodity. IGO down 5%, Min down 4%, South 32 down 4%, Boss down 6%, Liontown down 5%. So a bit of carnage, and it sort of feels like the most affected, or the most the ones that have fallen the most are definitely the stocks that have benefited the most as stocks have rallied. It's kind of the high beta has really been punished to the downside on a day where things have gone down.
It's interesting because looking at the morning note this morning from the UBS one, iron ore was up 0.9%. So it hasn't come off the back of a direct
I read that
for that one, then, unless that's just one
Yeah.
iron ore contract. There's probably bloody shitloads. Must have been down.
Who would have
elsewhere.
thought the stock prices couldn't go up every single day after day? It's been a hell of a run, especially in the metals and mining space for the last couple of months. So
Yeah.
not too much of a loss.
Yes, righto. One that has gone up after it went down, and it just, mate, stocks go up and down, they end up in the same spot. Spartan's probably one of that case. It was up last week, went down, going back up a bit today. Up about
We'll get a ding 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 out the way, Matty.
yeah.
I still have a couple.
That's old JD fly riding the wave, mate. So they are, mate. The drill hole peppering that they've been doing on site has yielded a potential new discovery. It's yielded an intersection, I'd say.
What should you call that discovery? Potential discovery.
From the peppering.
Yeah.
Well, they've taken the liberty to call it pepper. Quite pertinent. Love it.
The next discovery will be called Swiss cheese. Or...
Yeah, mate, maybe. Mate, good to see the rods are going into the ground. So 17.5 metres at 15.8 grams per tonne. Assays up dip from it are pending. So, look, it's not, I'll bring it up on screen here. It's in between the Gilbey's pit and Never Never. Doesn't look like to be the strike thickness of a Never Never. Looks about sub 100. Potentially being the key word here. This is one intercept. There's whether this proves up or not known, but would potentially provide another mining front separate from Never Never, even though it is a bit close. But look here, let's go down the hypothetical route here, boys.
Tell me, mate.
Why this would be a good thing if it did prove up.
It's all to do with the mining fronts, isn't it?
Why is a mining front important, Trav?
I want to know this question.
Well-
you are a miner. Tell me, mate.
Oh, mate, look, early days, it might not continue, but having a separate ore body, albeit it looks a less than 100 metre strike, it's not like a big thing, but it just provides another section of ore that is decoupled from the mining and backfill that will be happening at Never Never. This is fast forwarding to mining here, boys. Numerous pros and cons to this to separate it. It's very close, so that the good thing is like you can likely use the same decline, maybe even the same level access, but it separating it can be mined independently of the stoping and the paste fill. It's not all intertwined into that one ore body. Like if you added an extra 80 metres of strike to Never Never, you save on development because it's right there.
Yep.
But when you're in that one area, you can only fit so much machinery and
You're
people
still
in one
mining
area
constrained.
at a time
Yeah.
due to
Yeah.
the interaction, the ventilation issues. But if you've got something a bit off to the side,
Yeah.
this still looks pretty close.
You can dip it on there.
Well, you might be able to independently ventilate it.
Yeah.
Which means you can have a whole nother set of machinery workers in there that aren't affected by what's going on in Never Never. A bloody
Yeah.
but it is pretty close. It's first pass principles looking at it, and
I've got to admit, mate, I couldn't believe, like, we already know how close Never Never is to the existing pit. It's not too far away. This one's in between the two. Like, how did this stuff just not pop up till now? It's quite baffling, isn't it?
yeah. So, and look, being closer to the pit in between, that's obviously a good thing because that's where, from that pit is where the underground decline and the portal will be cut in the pit. So this would mean you would, if this does prove up, you would get to first ore quicker because it's halfway along. So that's a good thing. But the biggest one, no matter where you are, if you add it onto the Never Never or it's off to the side, more ounces per vertical metre. And if that did continue down, it could offset that pinch back in of Never Never from 700 metres down, which is what saw the stock come off last week. This has rebounded it a bit. So, look, early days, it's a positive. We'll see what bloody happens. But the biggest thing I want to talk about today is this Spartan mill, the flow sheet. Now, I wisely spent my weekend looking on the back of the Nathan Stortis yarn, which has given me a new passion in life, metallurgy, which has probably always been there. I thought, why not look into this Spartan processing flow sheet? And I just wanted to get my head around it. Now,
We touched on it briefly, didn't we, Matty? But I can see from the notes here you've gone in way greater detail. I'm very keen to
look,
hear what you got to say.
the narrative going around, how a Spartan going to fill the 2.5 million tonne per annum mill? So we've said it, everyone said it. That seems to be the big thing. The mill's there. How are they going to fill it? Is it actually applicable? Let's pick that apart. So here's the existing plant that they've got there. They've got a massive bloody jaw crusher and a massive SAG mill, and that SAG mill operates at a 2.5 million tonne per annum. So that was designed for the Gilbey's pit. So high tonnes, probably not as hard as your fresh underground material. Oh, look, possibly different metallurgy to underground fresh material, but look, we're just, I guess, talking about the crushing and the grinding here. Question is, are they locked in to 2.5 million tonne per annum?
Yeah. That's an interesting question to pose because that's the driver of costs here. I mean, like Nathan sort of said, you can basically, model your OPEX off of the size of the bloody mill. That's what drives everything.
Yeah, and but because that's there, let's look into, do they have to use it? Ideally, it'd be great if that mill was fit for purpose right now, but Stortis' big thing is it's all well and good toll treating and mix of mills and stuff, but mills are designed for an ore body, not an ore body next door. You wouldn't have designed it for old mate up the road you're not bloody treating shit for. So we're going to see what's probably, let's do some, get the crystal ball out here. So the only reason they'd be locked into 2.5 million tonne would be if they're planning to use that existing SAG mill that's there. So that was the last stage of their grinding circuit. Or they could repurpose that into a ball mill, I've been told. So I think, okay, the difference between it is, so I'll bring up the pictures. So your SAG mill is a lot taller and a lot shorter. Your ball mill is not as tall and it's longer. SAGs, they'll have like about 10 to 15% ball charge with bigger balls. So because they're taller, the rocks go up, and when they hit the bloody top, they fall down further. They got bigger balls, so it sort of smashes them up. but it won't get it as fine as a ball mill. Whereas a ball mill is got 35 to 40% ball charge, smaller balls. They're longer and taller, so the rocks aren't falling as far, but they're in there. There's more balls, so they're in there grinding more. So that's what the ball mill gets it down to, say, the 75 micron before you go down need to go down an ultra fine grinding route.
Yep.
So, if you do look at the Gascoigne feasibility study from 2016, they said the SAG mill, the one they've put in, would operate at 2.5 million tonne per annum and grind to 90 micron. So that's still pretty fine, but different material.
It's not your 75 where you get.
Well, but it's not. I wouldn't anticipate they'd be able to use that SAG to grind underground fresh, harder material to 90 micron.
You get a coarser.
Oh, unless you bloody repurpose it, leave it in there for ages. It's not made for it.
Yep.
Because the scope has changed. We're dealing with an underground ore body now with Never Never. We're not dealing with the Gilby's pit, the oxide transitional stuff. So we're assuming the underground's going to be harder. If that is the case, the current SAG might not be fit for purpose, because if it is harder, SAGs aren't as long, so the material doesn't stay in there as long, so it can't grind that hard material down to the required grind size to bloody leach it out properly. Not ideal to repurpose it, but and the SAGs actually chew a shitload more power than a ball mill, I've been told. Because they've got this decent ore body, it appears, Never looks to be proven up. And proven up at depth. Why not spend the capital and make that processing flow sheet fit for purpose for the Never ore body? Because what they've got at the moment, the existing jaw crusher, it's friggin' massive, but it doesn't have to run all the time, so who cares? You just crush it, chuck it in the stockpile on the flow sheet, just who cares? Run it 40, 50% of the time. So you don't need to change that. They're flagged putting in a secondary crushing system in. So that'll be like the addition of a cone crusher. So at the moment it was going jaw to SAG, but put a cone crusher in, that gets it down a bit finer. That takes it down to, say, like your 14 mil, which is what is required to go into a ball mill, because you can't go jaw to ball. Like, it needs to be small enough to go into the ball mill.
Jaw to cone to ball.
Yeah, so jaw to cone to ball. But adding that cone crusher in and that ball mill in, they put it in however big they want. They put it in, it could be a 1 million tonne one, could be 1.3, not 2.5. Like, it doesn't, they do not need to.
So you're saying you could right size a ball mill,
right size a cone and a ball,
a cone,
just bypass the SAG mill.
And use the rest of the processing infrastructure, bypass the SAG.
Well, you're going to, like, even all the tanks there, the leach tanks they got in,
applicable.
Even if they're too big or too many of them, doesn't matter. It's just more residence time in there.
Yeah.
They said they've got to put a thickener in. So a thickener goes in between the ball and the leach tanks. So that sort of decouples the crushing and milling circuit from the leaching circuit. So you've got a bit of storage there. So say if something fucks up either end, you don't have to turn the whole bloody plant off. It decouples it and it reduces the amount of material you got to send through the circuit, because you're taking a lot of the water out. You're thickening it up.
Yep.
Now, because of the higher grade, much higher grade than what the Gilby's pit was, they will have to upgrade the electro winning circuit as well, and probably make the gold room bigger, because there's bloody more ounces coming out. The original Gascoigne was for 100,000 ounces. This is for 150. So the electro winning is what takes the gold ions, converts them into solid after the elution circuit. So if it's higher grade, you need a bigger electro winning circuit. So
do you get 150? Just saying, what a 1.3?
1 million tonne at 4 grams. That's 130,000 ounces. 1.2 at 4 grams, 155. So it's going to be somewhere in that range. I would predict, and considering the resources 5.7, whatever they mix in. So just a bloody
thumbs up.
Just a thumbs up. So look, because T-Max Spartan note that predicted 120 mil restart capex, so that incorporated a mill upgrade, addition of a secondary crusher. Not sure if a ball mill is also included in that, but ball mill would be about 5 million.
So
yeah,
cheaper than I thought.
Yeah,
wow,
me too. But
wow.
I think
I'm sure that'd be included in those numbers there.
Yeah, I'm not
One of
sure.
the
It just mentioned secondary crusher, so not sure. Then the pre-production underground development, paste plant, and a cutback on the pit. So it depends if they go back into the pit to mine it, I would assume, if that cutback needs to happen or not, if it's all just underground. So look, 120, bloody God, add a bit on, 150, whatever. Overall, in this, I guess, bullish gold market, you would think that Spartan would be more looking at, right, let's get the mill perfectly designed for this ore body, rather than trying to repurpose things and trying to fit in with what's there. Might save it is a bit of extra capital, but you're guaranteeing you're giving yourself the best chance of getting a good recovery and a steady state mill, and not putting pressure on getting the feed from underground just to supply a mill that was already there. Why not?
Makes sense,
make it easy. There's gold down to a kilometre. May as well do it right. Time to get mining, I reckon.
Mate, I haven't. I think you're right about getting all this Met stuff right. And it reminds me, I haven't seen any Met results come out from Spartan in relation to the Never Never deposit yet.
Early on,
was it?
Yeah, I think when we first started the show, there was some Met results out.
Oh, you're right. Yeah, you're right. I haven't seen anything. That was about it. That was like 9 months ago.
Nah.
So
I think they can't. Should have dug into that now and see how much what the numbers were now that we're up the curve a bit on the metallurgy. Huh?
Can't fool us anymore.
How much?
Anyway,
what did he say? Optimal conditions.
Yeah. Now we can interrogate them better. But yeah, I'm looking forward to seeing some more Met results come out, because it's heck, mate, to design the right plant, you got to know what your bloody optimal conditions are for recovery.
And that's obviously only, I know we're honing in on this today, but it's a big driver of the CapEx, what they're going to do with this flow sheet. And I think this would be a likely way they'll go down. I would anticipate, to take the pressure off. But a lot more. Looking forward to seeing some studies coming out of there. Where's the underground going in? How much are they accessing? Are they using the pit? What is going on? And what the... Yeah, so...
It's interesting you say that, Matty, because the market's very much rewarded the company for not really talking about mining and just continuing to explore and drill and drill and drill all these different, anomalies, targets that they've got. That's what they've been rewarded for. That's what has seen a six-fold increase in the share price since about a year ago. So we'll see if that narrative and that sort of sentiment in the market starts to change over the next year.
Yeah, there's not many exploration projects that you see proven up down to 1 kilometre. So I would argue getting to this point is like, right, you're just bloody wasting drilling now. Get mining. If you know it's there, bloody get stuck into it. So this pepper potential discovery, that must have been found.
I didn't see the word potential in the announcement.
That's my word, potential. It's just discovery.
I agree with you.
Potential, it's an intersection. That isn't a coincidence, because that must have been found with VRIFY AI. Has to be.
It's actually in its wheelhouse. We know that Spartan is a VRIFY user not for the AI bit, but for the other stuff.
Well, they are a user, and it's coincidence that upon the announcement of VRIFY AI that Spartan have potentially found another load. Timing is...
It took about a week.
Yeah.
Took 1 week.
Yeah, I don't believe in coincidence. Do you,
Matty,
JD?
I reckon they saw your segment last week, Matty, and they're like, oh shit, this is what we can do now with VRIFY AI, and look what they've gone and found.
They loaded in the geophys, they loaded in the geochem, they loaded in the drill results, and VRIFY AI said, you should pepper this area. So they did, and lo and behold, mate.
I mean, they've had relatively, much lower sort of tenor hits in that pepper region, but, I think this really shows you down to the meter what VRIFY can do for you.
Yeah, no, look, it might be part of a bigger plan. It mightn't even be about finding the gold. It's taken action upon our recommendation to use VRIFY AI, and as a result of that, they've got an intersection and then a lengthy segment on the show. So the world works in mysterious ways. I would not be surprised if that's the case. But look, AI, this AI I can see they've fed the assays back into the model. The VRIFY AI has regenerated the model in 20 minutes with some potential drilling targets. Spartan have used that information to drill these targets. as you said, JD, which are to the metre, and voila, they've found more gold. So exploration is as easy as that now, boys, thanks to VRIFY AI. You need to flick grant@verify.com an email and say, in these exact words, Grant, I want to find more metal in the ground. And they will help you do that. Thank you.
Well said, Matty.
Thank you, Verify. So looking forward to seeing what's going on. Geez, I hope that flow sheet is a replica of what I've just said because I'll look like a genius.
Speaking of going mining, Matty, I wonder if we've seen some actual M&A action in the mining services
Now,
area.
I know, Trav, I know you got some strong views about this, but let's try keep it civil.
Well, the strong views are held by JD on this one.
Alrighty. So what we're talking about is Macmahon buying Decmil. Came up, flashed up with the headline 82% premium, guys. So they're coming in at 30 cents a share, all in cash. It implies an EV of 127 million, net debt of 17 million for Decmil. And just for reference, Macmahon's EV is about 700 million. So they've got a market cap around 500 million. Roughly, they got beaten up a bit today, and net debt of 200 million. So
that premium, JD, I mean, you don't see an 80% premium every day. They've had to pay up here, and Decmil, it's been a historically pretty troubled, mining services company, which we spoke about with Dan Porter.
Yeah, I mean, I couldn't agree more. I would have thought some of the shareholders would be happy to have the things taken off their hands, but they've come in with a big swing. 80, and it's probably to do with the I'd guess to do with the nature of the major shareholders. We can see that the board of Decmil and the top two shareholders support the deal. Those top two account for 27% roughly of the outstanding shares. So perhaps that's a reason why they had to come in and swing so big. But the deal is going to be funded out of Macmahon's cash reserves, plus they're going to put a bit of an extension on an existing debt facility that they've got. What they're then going to do is integrate the civils business into Decmil as a subsidiary of Macmahon. So that's going to maintain its own brand. They're even going to keep the CEO, which I've got some thoughts on, from Decmil to run that subsidiary. So like we sort of said, 82% premium, that's a big kick up. Decmil's trading up about 64%. So they're still a bit below the bid. They're trading around 28 cents. Versus a 30-cent bid. Given the sort of time value of money, this deal would only wrap up late August. That seems quite normal and people not really banking on another bidder coming in. And then on the flip side of that, you got Macmahon trading down 7% at, last time I looked, 22.5 cents.
Yeah, that's not a great response to an announced transaction. You hope the market supports you, but yeah, this one is it's not been welcomed, clearly.
No, it reminds me a bit of when we spoke a good half year ago about Parenti and DDH1, both in the sort of services type of business and a similar sort of neck of the woods, and a similar reaction. Parenti got marked down on it, and their big shareholders were pretty upset with the deal. In terms of the deal structure here, I know you love this sort of stuff, Trav. They're running two separate schemes. It's not as really complicated as it sounds, though. One's just for the ordinary shares and one's for the redeemable convertible preference shares that they've got. So the normal shares are what that 82% premium's on. And then the RCPS scheme comes in at a 71% premium to the face value. So the deal doesn't actually need Macmahon shareholder approval, but it does need the approval of Decmil. Obviously, that's pretty standard sort of stuff.
Yep. That makes sense. And I suppose they're going to assume the debt inside Decmil's capital structure, but pay how are they going to fund this cash reserves and drawing down more debt themselves if it's all cash, JD?
Yeah, cash, and they've got this existing debt facility, so they won't have to obviously raise equity or anything like that, which is I guess one sort of positive. And they maintain that they're going to stay within all their margins and their sort of ratios that they promise the market that they'll stay within, in terms of earnings to net debt and so on.
Mate, very interesting. What do you think about the other aspects of this deal?
Getting into the rationale, I guess it's sort of time for that. The civils business is less capital intensive, which is why Macmahon are promoting the deal. And then they can say that they're diversifying their exposure from this commodity risk, being a pure play sort of commodity mining service provider. You're getting away from that with civils being a bit less cyclical. But we touched on with Dan Porter, as you said before, Trav, the kind of troubled history that Decmil has. I mean, to say that they've underwhelmed the market, I think is a bit of a understatement. They've been pretty shocking performers for a number of years now. And, that doesn't leave anyone really surprised that Macmahon think they can come in and run the company better. But if you sort of follow that logic, it seems a bit confusing to me why you would keep management in place to run the business. I can't put two and two together there. I mean, there's a few other reasons why you might do the deal. You're getting the people, and hiring has been, notoriously tough for a number of years now. And then you've got the project pipeline. You've got a few synergies, which every M&A deal points to. And then you've got tax losses, although these are somewhat specific, they have to be relevant to the continuing business, as well as franking credits. But
I actually thought that was
deal,
it's an expensive price to pay if you're just trying to hire people. I mean, you're paying in excess of $100 million to hire people. Albeit we've heard multiple times that it's really hard to get good people in these sorts of businesses. I thought that tax loss point, there might be some merit to that. It was a pretty chunky number. There was like 180 odd million bucks in tax losses available.
Yeah, something like that. And I think 55 in franking credits. I mean, I think they all contribute, but they're not really knockout. And I'll get into the sort of valuation later, but just sort of like a couple more thoughts on how they want to diversify the business, because that really made me think of that conversation we had with Dan. And we talk about mining services being a pretty tough business, but civils isn't really easier. And people talk about it being capital light and all these sorts of things, but the margins are even tighter than mining services, and there's pretty real risk to them. They're super competitive, so the margins are very, very small. I mean, Decmil's FY24 EBITDA guidance midpoint is of 3.8% EBITDA margin, and supposedly that's meant to improve, but I mean, if our business was running at that, I'd be freaking terrified, So, like, I'll flash up a chart of some of their peers. They are sort of, the worst in the class there. Like, the peers are trading, for those listening in, between a 6 and 12% margin in the most recent period. So they're talking about this 3.8% margin improving over time. But like I say, they haven't got a track record of exactly performing. And then you think about the diversification. They want to do government infrastructure deals, contracts, as well as renewable sector contracts. And the sort of thoughts that I keep coming to are that what Dan said to us, when you've got the government on the other side, you're running a real risk. I think what he said was they're the judge and the jury, essentially. So they're the ones making the rules. And Monadelphous was the example he gave. They were the ones that didn't enter the renewables and the government sort of contracts space. And it served them really well, because all the government really wanted to do was outsource their risk. And that's what they did. And it cost a lot of these contractors pretty dearly over the last 5 odd years. So they're getting more diversification away from the commodity sort of business, but it's not really lowering the risk of the work that they're doing.
And then it takes a change in government and a change in policy for it all go bloody up in the air.
Yeah, that's why it sort of can be pretty good sometimes to stay in your lane and keep doing what you're good at. But ultimately, like, what really matters is how much they're paying, whether they're paying too much or too little. Because if they're getting it very cheap, then it's all good and well. But I don't think they necessarily are. So if you look on an EV to EBITDA multiple, they're paying 4.2 times this half year's guided earnings annualized. So that doesn't sound too bad. 4.2 times isn't massive. But I mean, if you take the midpoint for the FY24 guidance, it's a 7.2 times multiple. And obviously I'd prefer to do a lot of these numbers on much more forward consensus from sell side, but Decmil is a pretty truly hated company, and the sell side has neglected it for a long time. So there's not an awful lot of coverage. I couldn't really find any coverage to look at there. So I'm going to have to go off these sorts of rough numbers. And that 7.2 time multiple that I refer to there, that sort of sounds far better than it actually is, because they got this contribution from Homeground, which is this investment property for worker accommodation in the Gladstone area in Queensland that they own. So So this home ground asset contributes about $5 million to FY24 guidance. It's on the books at $63 million. The independent expert has given it, values under certain conditions far higher than that. But what I'm thinking here is that Macmahon will, in my opinion, try and sell this property straight away. And the big sort of read on whether this is a good or bad deal is how much they can get for this property. So it's on the books at $63 million. If they can get book value for it, or if they can get better, then it's great. And it sets a pretty good foundation for the acquisition being good. They're recouping about half of the initial outlay. And you look at some of the numbers, like that asset, $5 million EBITDA on 21% occupancy this financial year. And that occupancy is the highest it's been since FY15. So pretty sort of stunning stuff. Yeah, they've got a slide on home ground in their half-year results a few months back, and they talk about EBITDA increasing. They're banking a lot on a lot of work being done in that Gladstone area, and then being the place for these workers to stay. But I mean, the word on the decline is that they try to sell this, they speak about retaining it, but they just couldn't sell it. So wouldn't really buy into them and this whole narrative of deciding to retain the asset because the earnings were a bit better.
Can you put much value to those buying those tax losses effectively? 180 mil at, what's that, bloody 54 million bucks worth of tax losses on a company tax rate? Can you put value to that or not?
It's very hard to put value to that, and you kind of need to be a bit of a tax expert because
the tax fraction. Yeah, that's still,
so you can't use the whole thing.
No, and you can only
and they need to be
apply
applicable
at a rate that is applicable to the continuing business.
Yeah.
Exactly. It needs to be applied to the continuing business. So you can't just buy up a company which is on its nose with a huge amount of tax losses and chuck it on your business and ramp up earnings. Doesn't work that easily. But just to round out, Macmahon's, they're trading on 2 times EV to EBITDA using a calendar year 24 forecast
and
1.8
times for this. Wow.
Yeah. So, they're pretty rough multiples, but that certainly, those figures do not make the acquisition any more compelling. And if I think about the multiple that they're paying, the pretty low quality of Decmil as a business, and then you add it to that, the reliance of selling this property hopefully at book value, it really does seem like they're paying at much more the more expensive end of town for Decmil.
Hey JD, I just as you were talking there, you got me really curious because the market thinks this is a bad deal. You look at this and think, I don't quite understand why they're paying a big premium for a potentially pretty crappy business. So I couldn't help myself. But as you were talking, I opened their 2023 annual report. Which section did I go to? Incentives.
Remuneration.
Yeah. And in 2023, here's how they awarded bonus awards or short-term incentive awards. It was all about meeting a specific threshold target EBITA. And so they had a scale bonus to, at $105 million EBITA, $120 million EBITA, and stretch $130 million EBITA. You boys know how much I hate these just aggregate fixed, EBITDA targets or EBITA targets because you can do M&A to reach them as opposed to actually deliver shareholder returns. I'm a much bigger fan of TSR metrics to reward outcomes. In this case, we've seen Macmahon, they bought Pitt and Portal. Was that the end of last year?
And
they bought, they didn't pay much for that. That was that was sweet FL, but they bought it and now they're buying Decmil. This is a big valuation as opposed to a nothing valuation. I don't know, mate. Maybe, and then they say for FY24 there'll be no significant change to the STI plan, so it might still be an EBITA threshold metric, which might be more possible now as a result of this deal.
Yeah, what do they say, Trav? Show me the incentives.
I'll tell you what, if I was a Macmahon shareholder, I wish that I had the ability to vote on this deal, but I can't. Only Decmil can.
Yeah, the last comment I've got on the deal is something that Dan sort of said to us, and he said that the defining feature of a good contractor is their ability to assess risk, and that's pretty applicable to lots of different business operators, but I think time will tell whether they've done a good deal here.
Very good, boys. Love your work. Trav, good digging there, mate. On the show, live with Rick Ardinio. Beautiful. Back up the Murchison for a bit. Westgold, bloody in non-merger announcement, increased their mineral resource for the Bluebird South Junction, 827,000 ounces at 3.1 grams. Over doubled the ounces there. Looking at the picture here, looks like a bit of potential at old Bluebird. Decent hits, 20 metres at 5 grams. So got a bit of width, which is positive, shaping up to be a pretty bloody big mine. But 5 drill rigs operating just for the infill program there. Zooming in on these drill rigs in action, I was surprised not to see a K-Drill logo. Can you see one?
I'm looking very hard, mate.
Nah.
Nah.
I'm sure they're good drillers, but we know K-Drill are the best. Yeah, I guess with this new potential Karora merger, Westgold on a journey towards a 400,000 ounce producer. If the merger goes through, I just think K-Drill need to be on the journey with them.
The K in K-Drill stands for Kalgoorlie, and with Karora, they're getting
stands for Karora as well.
They're into the goldfields now, so you better get the Kalgoorlie, and the drillers.
Stands for kilo. They'll be just producing kilos of gold, not ounces. It'll be kilos, mate. Do you know? Here's a fun fact. Do you know who? Let's take a step back to about 2011. Do you know who was managing the drilling of the Paulson's Voyager loads and the Voyager 2 extension back in 2011?
I reckon I do know.
Rhino Sullivan.
Yep, I was going to guess that.
Rhino Sullivan. Northern Star's market cap back then, 100 to 150 million. Northern Star is now a $17.5 billion company, all on the back of Rhino Sullivan extending the Voyager load. So
was he at the
he was
wow.
He was running AUD with with Jeff Muir.
Yeah. Good on
So,
you.
mate, Westgold, you've got the opportunity to get K-Drill in. You've got the opportunity to get Rhino Sullivan on site and become a multi-billion-dollar gold mining powerhouse, just like Northern Star. But if you don't snap up K-Drill quickly, someone else will.
They said on the call that Beta Hunt was like 7 kilometres of strike, but only 3 kilometres have been drilled. Mate, start peppering it from surface using K-Drill.
Because if you don't get K-Drill, maybe Ramelius will.
And they love fighting over that.
Yeah. Maybe there's going to be some Rhino Sullivan M&A action. The fight for Ryan.
That is the best way to sell K-Drill to Westgold.
Yeah. Right. Trav.
Yeah.
Some more any family stuff you want to talk about?
Yeah, mate. There was another article in Bridget Carter's Mighty Dataroom column that surfaced last night. This one included some important clarifications, of course, pertaining to the big Gold Road rumour mill that's been going around. According to Carter, now Gold Road is the only real contender for the Greenstone stake from Orion. Now, that is, of course, unless Equinox elects to exercise their right over that 40%. Now, if that part of the story is true, that tells me Gold Road's actually been selected as the preferred bidder in this sale process right now, and it's trying to firm up its financing to get the deal over the line. Otherwise, the advisors on the sell side will be trying to bring in someone else if they can't get that financing together. The leak has probably complicated that a lot though, because have you seen the share price again today? It's down another 5-6%. I think it's down like 12% total since the leak came out. And that's a fair bit when a deal gets leaked and you come off that much, and it makes getting things done a lot harder. Now, Carter then rattles off the merit of the deal as if they're dot points on an acquisition presentation. Her reasons why they should do the deal, I would classify them as very dubious reasons to do M&A. I'll flash them up on the screen now. They can basically be boiled down to Gold Road gets bigger, which means more ETF buying. And that's financial gamesmanship, not value creation, gents. So, look, I think Gold Road really needs to articulate to its current investors, not future investors, but current investors, why diluting at a discount is better than putting themselves for sale right now. And you guys know where I stand on this one. That might lead to the question, well, who would buy them if they put themselves for sale?
Who would buy them, Trav?
Well, Goldfields is a logical one, right? They're the JV partner.
That gives them Gruyere and De Grey.
If they want De Grey or not, it doesn't really matter because you can sell that stake to someone probably eventually, and then you've got Northern Star. Like they're obsessed with reaching their 2 million ounce target. There's easy ounces for you, and if there's any international out there that wants to one day think that they've got a chance of picking up Goldfields Australia portfolio, well, you buy Gold Road, don't you? Because that puts you in pole position to pick up the rest of that portfolio.
I could tell you one thing I reckon will never happen is Northern Star and Goldfields doing a joint venture together. I could put my bloody bottom dollar on that.
Yeah,
I don't know.
What's
mate.
the
Just
history there?
different
Such
style companies.
Oh yeah, totally.
Very
They
different.
wouldn't want to be the non-operator either.
Yeah.
would they?
Nah, and they're just very, very different.
Yeah.
Put it that way.
Yeah. No, I believe you. Yeah. Yeah. But Northern Star would want Goldfields Australian assets, wouldn't they? Because they're freaking
Oh, I reckon
lower cost, better grade.
like Agnew and Invincible.
Invincible feed say knives.
Yeah,
Yeah.
but the actual mines, like
Yeah.
I reckon anyone, but yeah, if Invincible's going so well,
Yeah.
I don't think that they'd be letting that one go.
Yeah.
Yeah, I'm not too up on Agnew. I've worked there, but I know they extended and joined it all up from like Wahroonga, which was Agnew, and then you had Lawlers next door, which has been renamed New Holland, and that's all sort of linked up now. And I'd imagine at 3,500 Aussie gold price, or 36 or wherever it's. I'll check my LinkedIn to see the accurate price, but yeah, I think there'd be a lot of opportunity there, a lot of gold, and then they got bloody the old Redeemer and stuff next door, so there's a lot of going back in there. There's a lot going on. But
And then look, the one last thing I noticed in the Dataroom article, this latest one says that Gold Road is being advised by Goldman Sachs. And now the one before that, just a day earlier, said that Gold Road was being advised by Goldman Sachs and Gresham. So if the deal selling points in those 3 consecutive paragraphs about why it's a good deal didn't reveal who sent this intel to Miss Carter, then, well, there's your buy line. That's who it's from.
the bankers just getting the deal, trying to get a deal done, eh, Trav?
I just reckon they should start, Dataroom column and not write Bridget Carter, just write Goldman Sachs. Just even put the lead banker's name there. They'll love that. Take credit.
Yes. Oh, hey, boys, Pantoro Quarterly. Geez, you're thinking if it come out earlier, it was going to be a good one, but
Yeah.
it wasn't.
I don't think it's...
Was it good or bad?
I
They've lost
think
money.
it's the stock's down, everything's down. I think I was surprised to see them put up the numbers this early in the month, and but keep in mind the stock is up 157% since early November. Talk, Matty, talk.
It's got talk.
So the big overhang on Pantoro, are they making money yet? We look at the cash flow statement, operating cash flow plus $3.4 million. Yippee! But hang on, $7.4 million in investing cash flows went out the door, which is effectively Norseman CapEx, or, if you want to be more dubious, maybe they're capitalising OpEx. I don't know. But the real answer to that question is they're not making money just yet. But look.
Yeah, they're developing to that other side that we talked about in the previous episode to expand the underground.
I mean, look, their production ounces went higher again. The rate at which they were climbing sort of moderated a bit, so it's not like they're rapidly increasing production ounces yet. But they sold gold for an average of $3,184 an ounce in the quarter. Given the gold price is flirting with $3,700 an ounce, brought to you by Simon Lawson on LinkedIn, as usual.
Simon.
Mate, notice he posts the USD number if gold goes up only in US dollars. You only ever post it in the green. Just keep that one in mind. But given gold is where it is, assume they get a $3,600 per ounce average on gold sold in the June quarter on 20,000 ounces production in a quarter. The gold price gets them an extra $9 million cash. So that gold price is helping things a lot, and you'd expect that to flow through into the June quarter numbers, right? And then they would be making money. So let's not forget they've got debt repayments to kick in June though. The first 12 months of their debt facility were interest only. Principal starts to be repaid in the month of June. And they're kicking off capital development in this quarter as well to go underground at Scotia this quarter. They've chosen Ruck as the contractor for that. So a bit of extra capital required. They flagged $12.5 million to positive cash flow to get that underground development humming. But with Scotia, I was just sort of, we were chatting earlier, Matty. With Scotia, they're going to go underground. They're going to kick that off, and we know it's they've got these narrow vein sort of ore bodies there, and we'll chuck up a picture. But do you think we can expect the cost to improve in the near term, even though capital will be deployed there? What do you reckon about this?
So the pit's finishing, and then they're going underground. That's correct.
Correct.
Effectively, yeah. So, well, once if you say right, that pit's finished, there's no, I guess, cutbacks coming. Like, because you get to the bottom of the pit, it's like, right, to go deeper, you either got to do a cutback or just, don't know what the open pit term is, but just pretty much bench the floor out. Because once it reaches that point, you can take the veins out of the floor and like bench it and just friggin' retreat back and take it out that way. But once you can't go beyond that,
Gotcha.
because you got the you pretty much got effectively a vertical wall sitting there, so you'll just be blasting it, dig it out, and retreat back, and you can't go in there. So
Those ounces can be pretty low.
Oh, it's just
cash
it's
costs.
easy. Yeah, you're not really. You're just taking ore for bugger all. So it's There's a bit of a tick up there, but then you got to chuck that money into the capex to go underground with the decline and vent infrastructure and everything. So
In summary, Matty, talk,
mate, talk. Low margin gold talk.
You're a bit more generous there than I thought you would be. I read through the announcement earlier today, and just the whole language in which it's written, you'd think everything's positive, everything's rosy, but they had a realised gold price of almost $3,200. They didn't make money, and the debt repayments are kicking off in a quarter. So, I mean, they've had a great share price run, and they will, like you very rightly highlighted, they'll make more money with the current gold price where it is in this rise we've had. But I don't know if talk is probably the best way to summarise that one. They're a high cost producer.
Yeah, and it might be similar to an Ora Banda setup. It's like once they get Scotia underground and the main underground, like more of an underground feed, hopefully a lift in grade, sees them start getting some higher quality ounces through that mill. But you can, I guess, establish at the moment it's not really working.
Yeah, the rising gold price makes the blemishes seem less bad, but if gold was still at 2,800, it'd be real sort of worry zones.
Yeah. This is going to be the quarter coming up, and this might bloody lead into you, Trav. No, I'm going to save that for your quarterly thing.
Okay.
Because I'm going to talk about next quarter.
Love it.
Yeah, right. JD, your bloody Hawsons Iron project update. Tell you what, talk about the top of my watch list, mate, is Hawsons.
This is a brand new one to me. I hadn't heard about the company yesterday, but here we are. So they're a small
thank our
iron
intern,
ore.
Hobbsy, for this one.
Good work, Hobbsy.
On your Hobbsy. So they're a small iron ore hopeful. The project is right on the border between New South Wales and South Australia, so sort of close to Broken Hill. They're capped at $45 at the moment, up 30% today. As we speak, they're up as much as 50%. So they're trading in and around the sort of 4-cent range. They were as high as 70 cents less than 2 years ago. So they've had a pretty tremendous fall from grace. So what's come out today, Maddie, like you said, it's a project update. They've essentially just announced that they've selected 7 potential strategic investors to help them undertake DD for the DFS or the BFS funding. So this isn't project funding that's coming together or anything. They are getting a strategic investor to help them do the final study. And, it made me dig back in and see what else they'd come out with. They actually halted this study that they were doing in October of 2022 on the back of escalating costs across the mining industry, as well as the iron ore price having a bit of a blip and falling somewhat. So the share price at the time dropped 75% in reaction to that. And just thinking about the stock and where they're at in the company and everything, I'm no iron ore expert, but you'd have to kind of question, why is this all happening now? The iron ore price has been over $100 for the majority of the past 5 years. So you kind of think why hasn't the project come online? And there might be some valid reasons, whatever they may be, for that. But I can say pretty assuredly that if a strategic investor and, a big name in the iron ore world were to come on board with the sort of, foresight that they might even be a JV partner down the track, it'd go a long way to boosting the company's ambitions. And they do have this added tailwind of being a higher grade project, which, in the green steel debate is quite beneficial. But, this isn't a Pilbara project. There's logistically some more costs with everything. Iron ore and iron ore at scale has a lot of costs, as we sort of know. It's a economies of scale type of business. So we'll see what the sort of study can come up with. But at the moment, they've got about $3 million in cash, and they'll either need this deal to come through and get some funding to help them, or they may be capital raising before that.
Tell you what I don't like, JD. I'm not a fan at all of this. Whenever you see a stock shoot up on an announcement that was only announced like an hour into trade, I hate that. Just irks me.
Yeah.
Like you should release material stuff an hour before trade, like everyone else does, and that way, the market can kind of be a bit more rewarding of the volume that is there immediately for the stock.
I agree with you there, mate. Share your thoughts on AlphaHPN, mate. So this is your one.
What a learning day.
Anyway, this company is a mystery to me. AlphaHPN, or A4N as its ticker. It's a bit of a strange one. It's in trading halt pending a material development in relation to financing support for stage 2 of the HPA first project. This is a $950 million company, and I still don't understand it. It's high purity alumina. I'm not sure if we should be following this company or if it's more of an industrials business. Do the money miners care about this? Let me know. I'll force myself to do some research if so.
Who's put you onto this?
Well, it's a commodity. Like we mentioned, high purity alumina in our battery raw materials chat, and Matt Fernley said it was underrated. And anyway, I want to know if it's a commodity I need to get up to speed for, or if I can just let this one go through to the keeper.
Trav, you do not need any more to do in your life between the office modifications and every commodity you're following.
What if it's the new lithium,
I'm
mate?
concerned for you. Right. Trav, quarterly season coming up.
Yep.
What are you looking forward to, mate?
Well, I just thought I'd rattle off some things I want to hear some commentary from the majors out there. The big companies, the ones that we like to tune in and get some snippets and put faces of people on thumbnails when they're doing their quarterly calls. And I'll tell you what I'm looking out for. In South 32's case, give some detail on Gemco. What is the extent of the damage? What is the timeline to recommencing export from Grid Island? Why was the ship docked at the jetty with a cyclone coming in? Give us some answers. What we've received to date is not good enough. Minres, how is Onslow shaping up? Is it still on time and on budget? Of course, we know that the whole road is delayed, but can we expect the rest of Onslow to now line up with the whole road? I'm hearing some whispers, but I'd love some verification. Pilbara, let's see those unit costs. Like hopefully economies of scale, we're still seeing operating costs compressing lower. I'm really interested in that. FMG and Minres, so they were getting giant realisation of the 62% index for their low-grade iron ore product last quarter. Mins was 93%, FMG's was 91%. I want to know what that number is now that the iron ore market has softened materially, because that realisation can just swing so much, which double hurts you when you've got the iron ore price coming off too. Matty, JD, have you guys off the top of your head got anything you're looking out for in quarterly season?
Shitloads, Trav. BHP.
You follow that?
No, just purely on the nickel side.
Oh, yeah.
Because you think if something's going to materially come out about the future of Nickel West, it's possibly... Is it going to be on the back? You see a lot of these things be on the back of quarterlies sometimes. So
give some guidance,
Liontown development, how that's tracking and construction first, or how that's coming along. Boss Energy, want to see how their ramp-up's going. It's like...
they should be producing this week or next week. I want to see that.
Yeah, so it'd be funny, because Boss, what are they going to produce? About, £2.5 million, I think they're going for? Just hear me out here. But let's say uranium goes frickin' off its head and lifts by $100 a pound, and they're producing £2.5 million. There's what? Extra... Let's say there's an extra 200 million they could make in a year. 50 mil a quarter. Ramelius just printed 100 odd million for a quarter in free cash flow, and they're equivalent market caps.
Yeah.
So everyone gets caught up in this uranium thing, but have a look at actually how many pounds they're putting out and what a big stupid price would mean for cash in the door. Yeah. Don't know. I found that very interesting, that comparison.
Yeah. The equities.
That's an interesting. Yeah, that's a really interesting point. They've obviously got the barrels or whatever or the drums that they bought that would rise in value as well, boss. You know, they hold a bunch of uranium in a vault, which would be kind of interesting as well. And yeah, just the lives of the projects would be a differentiating factor there. If they can lock in some term contracts, boss, at decent prices, that'd be pretty interesting as well.
Yeah, I know. Look, if you think of EVs, what Ramelius is probably, what have they got, 400 million now, so they're about 1.8 EV. Boss is probably similar. Caps, they're probably similar EVs.
Now, Matty, you're forgetting the driving force.
What's that? Talk?
Flow of funds.
Flow of funds. Flow of funds.
Mate, the uranium ETFs, they don't care what the valuation, what the PNAV is. They want exposure. Buy.
But until you do the calc, you think, oh, they're going to make billions. I'm like, well, no, they're not. Even if it goes up to $190 a pound. What's
Lads,
some other goals? Most of them, a lot of them have come out already. Always interested to see what Gwalia is doing for Genesis.
Yeah, that'd be good. Yep.
And the performance of Golden Grove for 29 medals since copper is. Then again, I don't think they would have realised much of the recent copper gains because they were at the back end of the quarter. But next quarter, I am looking forward to next quarterly. So come friggin' July, once we see realised gold prices of potentially $3,500. Copper prices, if they stay around this $4.20 a pound, zinc prices up, just to see there could be some, well, there should be some a lot better quarterlies if the friggin' price goes up. Whether there's, I saw in the Northern Star announced the other day, inflationary pressures that coincide with a lift in commodity prices. There was a quote in there. I'm like, okay.
Yep, we'll see how quickly the costs follow. I'm sure they won't be too far behind. That's how these things sort of tend to happen.
Love it.
On the theme there, Matty, you sort of spoke to one that I'm very keen for. I'll focus on the big end of town, but Sandfire is one I'm looking for to see. I'm sure costs should be getting better at Matza. Mateo is sort of growing, and like you say, the copper price has been on a tear, so we'll see what that's sort of done for them. I mean, the share price has performed phenomenally. And the last one I've got, which I'm sure you boys are very keen to see, is Linus, and whether they're coming out with any more commentary on what's going on at Kalgoorlie.
Yeah, one I missed, Orabanda. They should be stoping, getting a bit of stope ore out now from Riverina. See what if there's been a change in cash there in the positive way. Mate, they all excite me. Every quarterly gets my full undivided attention. Even friggin' A4N.
Comment what you're looking forward to below. Money minus.
Hey. Not too easy. Mate, we're gonna bloody absolute ball terror tonight, don't we, JD?
Yeah, we are chatting with one of the very first purely focused uranium/nuclear funds that came about in the 2010s. So stay tuned for that one. Come out later this week.
Tonight. I'm coming back into work for it. Oh, mate. Might be half pissed, but I'll try not to be. Righto. Thanks to all the bloody partners as always. Top of the show. K-Drill taking Westgold to Northern Star status. And we also had VRIFY, pretty much solely responsible for the pepper deposit. And who else we got, boys? GetWet Solutions, DSI Underground, Silverstone, Anytime Exploration, WA Waterbores, and Brooks Airways.
Money minus.
Sensational work, lads. Love you.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.